If you are receiving the state pension right now, or approaching the point where you will, and you have some savings in the bank alongside a small occupational pension, this video is for you, not as a broad gesture toward everyone over 60, but specifically for anyone who has looked at a means-tested benefit, done the maths quietly, and concluded that is not for people like me. That conclusion may not be accurate, and what it has been costing you is worth finding out. Here is the confusion this video addresses directly. The rules around pension, credit, and savings. What counts toward the assessment? What does not? And where any hard disqualifying limit actually sits are genuinely different from most people's understanding. Not because the information is concealed, because the savings formula for pension credit is more generous than the rules for other means-tested benefits most people know about, and the point at which modest savings reduce an entitlement rather than end, it is not something most explanations bother to spell out. We are going to spell it out today. Using the official benefit and pension rates published by the Department for Work and Pensions for 2026 to 2027, we are covering 5 pension age entitlements. One includes a specific warning about a decision many people make at 66 without understanding the full financial picture. The item this list builds toward is the direct answer to the savings question. Quick context before we begin. This video is for UK state pension recipients and people approaching pension age, particularly those navigating pension credit, council tax, energy bills, and NHS entitlements on a fixed income. The goal is a plain English explanation of 5 rules that are genuinely easy to misread. Everything shared today comes from publicly available official guidance, the Department for Work and Pensions official rate schedule, the government's Money Helper Service, and the charity Age UK. This is educational content only, not personalized benefits or financial advice. And nothing here is a promise that you will receive any specific sum of money. Everyone's circumstances differ. Before any significant decision, use the government's official pension credit calculator or speak to a free benefits advisor through Citizens Advice. Number 5. In England, every person aged 60 and over is entitled to free NHS prescriptions, not reduced. Free. The process requires one step. Write your date of birth in the declaration box on the prescription form. No application, no means test, no income check. Age above 60 is the only criterion. And yet people are paying prescription charges at the pharmacy right now simply because no one told them. If that is you, the next prescription is already covered. The same applies to NHS site tests from 60. 1 free appointment per year through any NHS optician. The dental rule is different. Free NHS dental treatment at pension age applies to those receiving the guarantee credit element of pension credit, or to those on a low income who apply for what is called the HC2 certificate through the NHS Low Income Scheme. According to Citizens Advice, that certificate takes around 20 minutes to apply for and covers dental care, sight tests, and glasses for up to 5 years. Finding an NHS dentist accepting new patients remains a genuine practical difficulty in many areas. That is a systemic issue this video cannot resolve. But for anyone already registered with an NHS dentist, the entitlement is real and the cost question is settled. Number 3, every winter, between October and March. The Warm Home discount applies £150 as a credit to eligible households' electricity bills, not a separate payment, a direct reduction of what is owed. According to official guidance from the energy regulator Ofgem, households in England, Scotland, and Wales receiving the guarantee credit element of pension credit are automatically identified by the Department for Work and Pensions, which passes their details to their energy supplier. No action needed. 2 things most summaries leave out. The discount is not limited to guarantee credit recipients. Those on the savings credit element of pension credit or certain other means-tested benefits may also qualify, though they may need to apply directly rather than being matched automatically. The government's Money Helper Service has the full list and the 2025 to 2026 scheme is now closed. The 2026 to 2027 scheme opens in autumn. 2026. If you missed the discount this winter, understanding your pension credit eligibility before the qualifying date in late summer 2026 is the step that matters. Number 1. The average council tax bill in England now exceeds £2,000 a year. Council tax reduction is a discount administered by local councils. And for pension age claimants, the rules are significantly more generous than for those of working age. If you receive the guarantee credit part of pension credit, you will in most cases qualify for a full reduction, a council tax bill reduced to zero. According to Citizens Advice and the Department for Work and Pensions, there is no upper savings limit. For this reduction, for guarantee credit recipients, if you are not on pension credit but have a low income and savings below £16,000, a partial reduction is likely. The practical point most explanations miss this reduction is not automatic. The DWP does not pass your pension credit status to your local council. Your council issues a bill and waits. The only way a reduction is applied is if you apply separately to your council, search your council's name, and the words Council Tax Reduction on the government's official website. In most areas, you will need to confirm your circumstances annually. The initial application takes around 20 minutes. Before number 4. A composite account drawn from the pattern of cases Citizens Advice advisors encounter regularly. Dorothy, this is an illustrative composite. Not a real individual is 73, a retired school secretary from the East Midlands, receiving the old state pension alongside a small occupational pension, with just over £8,000 in a savings account. For 3 years, she told herself her savings and small pension income put pension credit beyond reach. She paid full council tax. She never received the warm home discount. A neighbor encouraged her to book a free Citizens Advice benefits check. The appointment took 40 minutes. She qualified for guarantee credit, full council tax reduction, and the warm home discount, approximately £2,800 a year she had been entitled to and never received. The savings calculation she had been carrying was not the one the Department for Work and Pensions actually uses. Number 4. When you reach state pension age, you do not have to claim immediately. For every 9 weeks you defer. Your state pension increases by 1% permanently. Defer for a full year and it rises by 5.8%. On the full new state pension of £241.30 a week in 2026 to 2027, confirmed in the DWP's official rate schedule, that is approximately £14 extra every week for life. To break even on a 1-year deferral, you need to receive the higher pension for approximately 17 years, placing the break-even at around age 83. For someone claiming at 66, there is also a separate option for anyone who has already reached state pension age but has not yet made a claim. According to the Low Incomes Tax Reform Group and the Age UK State Pension Fact Sheet, a new state pension claim can be backdated by up to 12 months. The missed payments are calculated and paid alongside your first regular payment. On the full new state pension, 12 months of arrears comes to over £12,500. The DWP does not raise this automatically. You need to ask for backdating when you make the claim. Now, the deferral warning, most discussions skip. If you delay claiming, your income during that period is lower, which may bring you within the pension credit threshold and qualify you for council tax reduction and the warm home discount in the meantime. Once you begin claiming the higher deferred pension, that income may push you above the threshold and close the gateway entitlements. According to the Low Incomes Tax Reform Group, the combined value of those gateway benefits can exceed the financial gain from deferral for someone near the threshold. This is not an argument against deferring, it is an argument for running the complete calculation first. Number 2, pension credit has 2 parts. The first is called the guarantee credit. The second is called the savings credit. And it is what most people watching this have never had properly explained. The guarantee credit tops up your total weekly income to a minimum of £238 if you are single, or £363 and 25 pence if you are in a couple. For 2026 to 2027, these figures come directly from the Department for Work and Pensions official rate document. If your total weekly income falls below those figures, pension credit pays the difference. Now, the savings calculation, according to that same official document, savings below £10,000 are disregarded entirely, not treated as income, not weighed against the threshold, not present in the assessment at all, above £10,000. The DWP adds a tariff income of £1 a week for every £500 above the disregard. £1 per £500. The equivalent rate for income support and many other means-tested benefits is £1 per £250, twice as harsh. Pension credit uses the more generous calculation. In practice, someone with £15,000 in savings has £5,000 above the disregard in minutes signed, adding £10 a week to their assessed income. If their actual income is £200 a week, their assessed total becomes $210, still well below the £238 threshold. They would qualify. Someone who concluded that £15,000 rules them out entirely may have been using the wrong formula. The critical point there is no upper savings limit that automatically bars a pension credit claim. The DWP's official rate schedule for 2026 to 2027 lists the capital upper limit for pension credit as no limit. Compare that to income support and housing benefit, where savings above £16,000 close the door entirely. With pension credit, higher savings reduce the entitlement gradually, they do not end it. For anyone who reached state pension age before the 6th of April 2016, broadly aged 76 or older in 2026, there is also the savings credit element. The Department for Work and Pensions confirms the maximum savings credit for 2026 to 2027 is £17.96 a week for a single person, approximately £934 a year. The weekly income threshold at which it applies is £208.07 for single claimants. And crucially, it may apply even when income is above the guarantee credit level. If you reach state pension age before April 2016 and have never specifically checked your savings credit eligibility, that check is worth making. A pension credit claim can be backdated by up to 3 months per the official government guidance. So there is no need to delay once the eligibility check is done. And the gateway point that ties everything together, even a pension credit entitlement of £1 a week, opens the door to full council tax reduction. The warm home discount, free NHS dental treatment, and a free television license at 75. The gateway value of a small entitlement can reach several £1,000s a year. The only way to know whether you have one is to check. 3 actions. Use the government's official pension credit calculator. It covers both guarantee credit and savings credit and takes around 15 minutes. If you do one thing after this, make it that not checking is the only outcome today that costs you anything. For a personalized assessment of your specific circumstances, book a free benefits check through Citizens Advice. The pattern behind Dorothy's story is one they see constantly. And one appointment is often all it takes. And if you know someone on the state pension who has dismissed pension credit because of savings or a small pension income, share this. The savings formula in number 2 is the explanation most people in that position have never encountered clearly. That 10-second share could start a process worth thousands of pounds a year. The next video covers the mixed age couples rule. What happens to pension credit eligibility when you have reached state pension age and your partner has not? It is the question that surfaces in almost every comment section on this topic and almost never receives a clear, sourced answer. That is next.